This is the Asia Trade. I'm Annabelle Drewlers in Hong Kong.
I'm Avril in Singapore. The top stories this hour. Asian stocks poised for gains after dip buyers reversed a risk sell-off on Wall Street. The S&P 500 closing at a record high, led by blue chips and small caps. Broadcom slipping in late trade as a strong forecast fails to meet investors' expectations for AI revenue. Also ahead, Disney taking $1 billion stake in OpenAI and licensing its iconic characters for use on the startup's video platform. Plus, we speak exclusively to Uber CEO Dara Khosrowshahi as he visits Asia, seeking business expansion and robotaxi partnerships. But first, take a look at how Asia is setting up. We have Australia in the early goings and looking like a bright start. This is after a relatively tepid performance just a day ago. We did see a mild panic attack on Asia stocks, given Oracle with its high capex. That disappointment, that played out in the session yesterday. But then Wall Street had some other ideas. So we'll see how that plays through following those Broadcom earnings as well as the call. And we are, of course, seeing how that Fed exuberance fed into some of the reprieve for Asia currencies. And that didn't provide that much of a tailwind for stocks just a day ago in the region. It is worth noting that we are flat on the region's benchmark. Now, when it comes to the Chinese yuan, we are seeing it hitting those fresh highs for the year against the greenback, but also worth noting that we are seeing it also at those highs versus the likes of the yen, even the Korean won, as we digest as well this readout from this Chinese Economic Work Conference. So a couple of things to unpack for today, Belle.
Yeah, there's certainly a lot on the agenda as we close out the week, but you mentioned those moves we had in the Wall Street session, and it was an interesting one because we saw a lot of dip buyers emerging in the session. Stress or anxiety around Oracle's numbers, and you certainly saw that dip, but broadly we actually saw equities moving to the upside. You can see that the S&P 500 climbing 0.2%, but closing at a record. In terms of the actual numbers that we're watching, certainly you've got that big focus on Broadcom in late trade here. You can see that stock slipping. The earnings call is actually ongoing here. We've got the president, CEO, that's Hockey Tan, talking about the deal with OpenAI, saying that custom chip work is very advanced, but still that deal, that gigawatt deal work is going to be small coming into 2026. It does seem like even though the company gave a strong revenue forecast for the current quarter, it hasn't been enough to impress investors. Also keeping an eye on Disney that you can see there, because still in that tech space, we got the news they're investing $1 billion in OpenAI and a deal, of course, to also share some of its most famous characters as well with the ChatGPT maker.
Yeah, Belle, lots of tech developments, and against this backdrop, we saw the S&P 500 closing at a record back near those October intraday peaks. Let's bring our Asia Markets Executive Editor Paul Dobson for more on this. So, Paul, we are seeing somehow markets are shrugging off a little the bad news about AI or the disappointments. What do you make of this, and what is this going to mean for Asia?
Yeah, so I guess the volatility that we're seeing even after the Fed cut interest rates speaks to the sort of fragile sentiment that we have in markets right now, where there's a lot of people that are buying the idea that the economy is still performing strong, that the Trump stimulus is still feeding through the economy, and lower interest rates is going to help that as well. So you see the small caps benefiting, you see the blue chips as well. But there is that tech angst, and since tech is such a large chunk of the gauge, that's counting against it at the moment. I think if the rally is broadening and more companies are joining in, then probably that should be taken as a sign of health. But it is leading to slower progress on an index-wide level. And there are these jitters. And you see it today with Broadcom yesterday. We saw it very clearly with Oracle as well. People worried about how much investment is flowing into AI relative to how much people are actually going to get in terms of a payment from that.
Paul, let's also talk about the Fed, because it's quite exceptional, really, that we had so much anticipation around that decision. And also, maybe, yes, the cut priced in, but still lots of anxiety, I guess, around how much easing we were looking ahead to next year. But we had an interview, actually, with Oaktree Capital's co-founder, Howard Marks. Let's just listen to what he had to say about the outlook.
I believe that the Fed should be passive most of the time, and only come to the rescue if the market is, if the economy is seriously overheated and tending towards hyperinflation, or seriously underactive and not creating jobs.
Given, as you say, you've still got that exuberance around AI, I guess, but also the US economy looking stronger than maybe we actually could have anticipated, do we need to be worried about the Fed not really easing much more from here, possibly?
Yeah. Well, I guess Howard Marks isn't going to be in the running for the Fed chair after those remarks. Don't tell President Trump, who obviously wants to see interest rates continuing to come lower, wants to see them running the economy hot, and that's what he's going to be pushing for, and that's kind of what he's going to be asking the new Fed chair to do as well. So do you think a new leadership at some point during the new year is probably going to try and corral everybody around the idea that they can allow interest rates to come lower again? And also that then that can continue to speed up growth and help the economy more broadly. I think, you've got to take the comments from Howard Marks with a pinch of salt. He is, mostly a credit investor, I guess. So he prefers higher yields. He doesn't want very low interest rates. If there's lower interest rates, that forces him into riskier parts of the debt universe, and he probably doesn't want to have to take additional risk if he can avoid it. So that's one view. But I do think, after what we saw with the Fed this week, it's pretty clear they're signaling that they're going to go on pause for a while and wait for the data to catch up and see where they are in terms of the economy. The market is priced for about 2 cuts over the course of next year, one in the first half, one in the second half, which seems, reasonable, all things being equal, as long as we continue to see inflation coming down. And Fed Chair Powell did at least give some indications in his press conference that he saw the idea that, the inflation from the tariffs is going to run off, and that could lead to a little bit more of a cooling there.
Paul, to your point, I guess Howard Marks doesn't want more cuts because that could mean more cockroaches. But talk to us about the risks in the market, because the likes of Nomura, they're advocating maybe buy a bit of yen as sort of protection against other risks.
Yeah, and which I think is interesting and quite counter to the consensus, which seems to be that the yen will go weaker again, at least in the first half of next year. I've seen quite a few of those forecasts, putting it the other side of 150, 160 even. And so, looking for protection is a little bit counter consensus, and maybe that's why they see it as a cheap option. We do have the BOJ coming up next week. They are expected to raise interest rates. That's moving in the opposite direction to the Fed and should give the yen some support, but it hasn't really been all that forthcoming so far, despite the moves in the 2 different directions from those central banks. I think the currency markets could be really exciting and interesting next year because all the central banks are moving in different directions at different speeds, though.
Paul, great to have you with us this morning. That was our Bloomberg Asia Markets executive editor, Paul Dobson, there. And let's shift now to China, because a closely watched meeting, or policy meeting in the country rather, has ended with officials signalling they will maintain economic support next year, but refrain from ramping up stimulus. Let's bring in our China correspondent, Min Lo. So, Min, we were just discussing there with Paul that the US economy is in better shape than maybe could have been anticipated, but it seems like China's economy is also held up as well.
Yeah, I think this year, given the circumstances, given Liberation Day, the Chinese economy actually has done pretty well. Its exports really was able to pivot to other countries. And I think that's what the readout shows, right? The reason why they're not ramping up stimulus, it seems, is like they're happy with where things are going. And they're more focused on cross-cyclical, not just counter-cyclical factors, which means they're focusing more on long-term growth. And I think I want to point out, if you look at monetary and fiscal policy, the language is the same, proactive fiscal policy. So economists expecting maybe the fiscal deficit for 2026, when we get it in March during the 2 sessions, is likely to be still at 4%, same as this year, which is already the highest in a few decades. The monetary policy going to be moderately loose, again, same as last year, but the key difference here, the last readout in December of 2024, they mentioned cutting rates in a timely manner. This time they mentioned that they will use interest rate in a flexible and efficient manner. So I think it sounds a little bit less forceful. It sounds like it will be more data dependent. It will be more dependent on external factors, the external environment as well, and they will respond accordingly.
What about more measures to boost consumption, Min? Are we likely to see that coming through?
Yeah, so there are about 8 key priorities that the government has outlined, and consumption is the number 1 priority. Again, the same as what we got in the 2 sessions this year in March as well. So they're keeping that priority as the top one. They talked about how, the government will try to increase the income of people in the urban and rural areas. They talked about optimizing that consumption subsidy program. Now, the use of the word optimizing is quite interesting. I think it shows that perhaps there is limited room to expand that subsidy program. They're just going to optimize it. There was also a line about increasing central government budget. Now, this suggests the government could increase the issuance of ultra-long special bonds to fund other sort of activities or subsidies to boost consumption, potentially to boost services consumption. That was one of the areas that had been highlighted by the Politburo. Of course, increasing people's livelihood is also among one of the priorities. Lower down, the number 7 priority. So the government talked about, providing social safety net for key groups, disadvantaged groups, stabilizing employment for migrant workers and for fresh graduates as well.
Min Min, thank you. Our Bloomberg China correspondent, Min Min Lo. Now, we are also tracking some developments out of the U.S. in relation to AI and all this talk about how for some of these AI stakeholders and players, there's been a need for a central source of AI approval rather than taking a state-by-state sort of approach. And we are seeing the U.S. president participating in this signing ceremony at the White House. He has spoke about this need for a central source of AI approval and also, interestingly, saying that they'll start paying off debt with tariff money soon. He also highlighted how in the U.S. they seem to be leading in the AI industry by a lot. So you're seeing those live pictures out of the White House. Coming up on the Asia Trade, Uber CEO Dara Khosrowshahi joins us for an exclusive interview live in our Hong Kong studio. Invesco tells us why they think Fed easing should be good for emerging market equities. And Vanke Insights discusses the outlook for oil amid tensions over Venezuela. Much more ahead. This is Bloomberg.
Well, US tech stocks are in focus following Broadcom's earnings report. The chipmaker issuing a strong revenue forecast for the current quarter and signaling robust demand for AI data center equipment. But as you can see, that we've actually seen shares reversing those earlier gains, now trading down more than 5% in late trades. Let's get more on this now and bring in our BI senior semiconductors analyst, Kunjan Sabani. And Kunjan, it's an interesting one because, yeah, we got that really upbeat forecast, but it just hasn't been enough to impress investors, it seems.
Yeah, I mean, look, there's overall, especially given what Oracle did yesterday, there seems to be an overall fatigue coming into the AI space. But fundamentally, when we just look at Broadcom, this was one of the most strongest AI semis report this quarter. I mean, they beat the AI revenue numbers for next quarter of their fiscal 1Q by almost 1.4 billion, which is a 20% upside to what the street was. They gave an outlook sort of for the next 18 months, which implies, again, significant upside than what the street was expecting in their next fiscal 26 and fiscal 27 included. They continue to add more customers, and they also upsided another $11 billion to Anthropic, which just last quarter they had signed for $10 billion. So now, so they keep on adding, fundamental AI revenue with adding more customers, upsiding to the current customers. Their backlog keeps on becoming stronger, and there's room for more upside. But yeah, the reversal is surprising. It just tells you about the state of the market and given the time of the year.
Yeah, so what does all this actually also tell us about the momentum in Broadcom's hyperscaler customers?
And look, I mean, all of the customers overall have continued to increase their capex. But also keep in mind, majority of the spend today goes to GPUs. And what Broadcom really sells are ASICs, which are rising as in terms of growth percentage, but still a very small share of that market. So, even if there is a concern among spending in the hyperscalers at the high level, Broadcom can still continue seeing its numbers go up significantly because of the scale that is today, which is around mid-single-digit billion. So easy for it to still continue doubling and tripling at that rate, even if, let's say, there was a real risk in the total rise in spending amongst hyperscalers.
Kunjan, thanks very much for your analysis. Bloomberg Intelligence Senior Semiconductors Analyst Kunjan Sobhani. Meantime, Walt Disney is licensing iconic characters to OpenAI for use on its AI video platform and has agreed to take $1 billion stake in the startup. Let's get to Chris Palmieri in LA. He leads our media and entertainment coverage. Chris, put things in context for us. Why does it make sense for this Disney and OpenAI tie-up?
Well, this has been an issue, and all of the creative companies have been saying that this is a concern, that their copyrights are going to be ripped off if they don't do something. And Disney has been a leader in technologies over the decades, and so I think this is probably going to be viewed as a very positive step in sort of a relationship between these AI companies and the entertainment community.
This is the largest equity investment we've seen by a major Hollywood studio in an AI model developer to date. And we know that OpenAI as well has spent months speaking with different studios. So do you think this is sort of setting a precedent for where we go from here?
For sure. And I think it's not only setting a preference for the companies in AI, but for consumers as well. So part of this is going to involve you and me just using these tools to create videos based on characters. Could be Pixar characters, Star Wars, Marvel, and then creating shorts that Disney could put on Disney+. So just kind of a real revolution in terms of creativity.
Chris, thanks so much for joining us this morning. That was Chris Palmieri there, who leads our media and entertainment coverage in LA. And we'll have much more ahead on the Asia trade. This is Bloomberg.
We're taking you live to the Oval Office, where the U.S. president has been at a signing ceremony, and he's been talking about a range of issues, key among them some of these geopolitical conflicts. He's been weighing in on China and Russia, saying that he's spoken to them about denuclearization, but also interesting when it comes to the conflict, the invasion of Ukraine. He'll say if the U.S. attends the Ukraine meeting on Saturday, and says that they will be attending this meeting, the U.S. side, talking about how the Europeans want the U.S. and Trump to also attend this meeting, and that there's a good chance. Of course, we know how for previously brokered or proposed deal with Ukraine, Trump seems to have been running out of patience with the Russians and both the Ukrainians as well. Now, we've also been tracking some of these developments related to Venezuela. The Brazilian president, Luiz Inácio Lula da Silva, spoke by phone with the Venezuelan leader, Nicolás Maduro, last week as Maduro faces mounting U.S. pressure to step aside. And Lula says he also told the U.S. president he doesn't want a war in Latin America. Let's bring in Bloomberg national security and international economics reporter Eric Martin. Eric, I wonder if we could just get you to react first to what Trump has been saying on Venezuela, that they will be starting on land soon. And this is coming not long after this escalation between the U.S. and Venezuela.
Well, that's right. We've heard him for a number of weeks now say that land strikes would be starting soon, but we've also seen a lot of activity this week. We saw yesterday this daring seizure of this tanker. We saw Attorney General Pam Bondi tweeting a video of of troops descending, rappelling or dropping from Black Hawk helicopters above this tanker to the deck of the ship. Today we saw the U.S. reimposing sanctions on Maduro's nephews and on other tankers. So in quick succession here, in a couple of days, we've seen the U.S. tightening the screws on the Venezuelan regime in a meaningful way, and everyone is kind of waiting with bated breath to see if the U.S. makes good on Trump's promise to begin these strikes on land.
We are hearing about how the Brazilian leader has spoken to his Venezuelan counterpart. What is your read on the potential for Brazil to mediate between the U.S. and Venezuela?
Well, last week we wrote about how José Batista, the billionaire owner of JBS, the world's largest meat company, had been in Venezuela in November and had been essentially reinforcing the U.S. administration message about trying to get Maduro to step aside. He obviously benefits from stability of a business environment there. We also know that Maduro and Lula have had a long-standing relationship, although they hadn't spoken for, if I'm recalling correctly, about a year since this stolen election, the election of July 28th of 2024, which the international community has condemned Maduro for not permitting for a fair counting of the ballots and a fair result there. So we don't know what the message from President Lula was, but we have seen him with this historic role in the past as an interlocutor with Maduro, as somebody who Maduro has a relationship with, to try to convey messages and persuade him of things one way or another at times.
You talked about how the international community is viewing this. How do you think they are approaching the specter of how this might impact Venezuelan oil exports?
Well, certainly the concern, we actually have a story that we published a few minutes ago saying that the Wednesday strike, yesterday's strike, is just the first of a series of planned or contemplated actions by the U.S. to put more pressure on Maduro. Most Venezuelan oil goes to China, but some of it also does go to its ally Cuba at a discount. And so what that means for the Cuban and Venezuelan alliance and those regimes in Latin America is a huge question. And also Venezuela presumably trying to figure out how can they export oil to China, their number one buyer, without having it seized by the U.S. And so that's a challenge, a new challenge for them that's been highlighted in a way that it hadn't been before based on yesterday's seizure.
Eric, thank you so much. Our Bloomberg national security and international economics reporter, Eric Martin. Coming up next, we speak exclusively to Uber CEO Dara Khosrowshahi as he visits Asia, seeking business expansion and robotaxi partnerships. This is Bloomberg.
Well, our next guest runs rideshare giant Uber and is visiting Asia seeking new avenues of growth. The company's been successful in many markets in this region, but has also faced regulatory hurdles and local competition. Joining us exclusively now is the Uber CEO, Dara Khosrowshahi, joining us this morning, Dara. So it's been a very busy week for you.
Yes, it has.
You've been Japan, Korea, Taiwan, Hong Kong. What's been the sort of standout so far, the key takeaways?
Well, the key takeaways for us is growth. The APAC market and in particular the North Asia markets as well, they are huge growth markets for us. And if you look, for example, in the rideshare business, over 30% of our global first trips coming into the category come from the APAC region. The area is growing very quickly, including taxi as well. which is actually one of our newest products on the platform. So for me, coming here, seeing the teams, meeting with local business people and regulators, and talking about how we can be part of the future growth of the region is really what my agenda is.
Early this year, you also put out a statement on the robotaxi push as well.
Yes.
And so the Middle East and Asia were the markets for 2025
Yes.
to launch. And we've seen, of course, that initial deployment in the Middle East already. What's happening on the Asia side?
Well, lots of discussions on the Asia side. I think what's really important is to set up a regulatory framework to go forward. For example, Hong Kong has various trials and pilots going on, and in many other markets, we're talking to regulators about how we can be a part of shaping rideshare and autonomous rideshare going forward. The technology is absolutely getting there. These are the robot driver. It doesn't get tired, doesn't get distracted, and we very much look forward to working with various authorities to introduce rideshare into the markets. We're now live in 4 markets now, as we speak, in the U.S. And in the Middle East. And I expect to be in 10-plus markets by next year. And we want those markets to be in the Asia-Pacific region as well.
Where then in Asia do you think is the most likely place?
We'll see. I think that certainly Japan has great potential. With...
They are behind on their regulation.
They are behind in their regulation, but I think that they also understand that with an aging population, there's a real need for transportation, not just in the large cities, but in the rural areas. And for example, I experienced that personally going to Kaga City, and where we have communal rideshare, and kind of took a rideshare trip and understood what the needs are there. So we're talking with various countries, regulatory authorities. I think Japan is going to be a part of it. I certainly hope that Hong Kong is going to be a part of it. Australia, where we were just talking about, is a huge market for us. So we're having those dialogues, and I think that the picture will shape up over the next 2 years because the technology is definitely getting there.
Speaking of Hong Kong, because we do see the trials that are underway,
Yes.
and they're being conducted by Baidu's Apollo Go program. Would you be looking to work with them on that, or are you working with them on that?
Baidu is a partner of ours, so we partner with Baidu. We're in WeRide, for example, in Abu Dhabi and expanding there. Pony's another partner of ours. So we absolutely expect to be on the road with all 3 of them. When you look at Chinese autonomous technology and the development there, they are one of the leaders on a global basis. And for us, we want to partner with the whole autonomous ecosystem to bring this technology to reality.
So just to clarify, you're expecting to ramp up the markets that you're in to 10 autonomous driving markets.
10 plus, yes.
By next year.
Yes.
And you anticipate that those could also come from the Asia region?
They could come from the Asia region, and they could also involve some of the partners that we talked about, Baidu, WeRide, and Pony.
And where, if not Hong Kong, then where else do you think? And Japan, as I said, it really is behind on the regulatory side.
In every major market in which we operate, we are having discussions with autonomous partners, and then most importantly, regulators, as to how we can introduce autonomous, either in a pilot way or within some restricted operational domain. Everyone wants this product. It's a product that's delightful. In markets, for example, in Atlanta, in Austin, and Abu Dhabi, our consumers love the product. They feel safe, and this technology is hitting prime time now, and every major city in the world wants to be a part of that revolution.
I do find it interesting on Baidu in particular with the Apollo Go program, because they are conducting the trials here. They're already starting to remove the human drivers across some of their markets in mainland China. And the way that you can get a Baidu Apollo Go ride in mainland China is often through a Baidu-controlled platform. Yes. Do you see that risk of them maybe pursuing that strategy here instead of teaming up with you on it?
I don't think it's going to be black and white in terms of the strategy. I think that there could be many hybrid approaches. I compare it to the food delivery business. For example, we work with Starbucks or McDonald's that has a direct app, and customers go direct to get the food there. At the same time, they also participate in the marketplace. So I think the autonomous ecosystem will be the same way. There will be some direct some customers going direct, and we think that with the Uber marketplace, we can bring the kind of demand that over 200 million monthly active platform customers can bring to autonomous, so that we get those cars on the road and incredibly busy with very high utilization.
Let's talk about the US as well, because you're partnering there with Waymo as well.
Yes.
In certain cities.
Terrific partner.
Yeah, terrific partner.
Yeah.
Actually, in the latest earnings, I think you said excellent as well. But in some places, Waymo is expanding into new cities without you and becoming a direct competitor. And that's something that was highlighted even by Wedbush earlier this week as being a potential risk for your business next year. How are you assessing that?
Well, I think it's the same example that I gave you, that in some ways the McDonald's app is a competitor to Uber Eats, and the two can coexist. And it's very, very early in the development of autonomous. We have to make sure that we have access to autonomous technology in the major cities that have the right regulatory frameworks to allow autonomous. And we're very confident as we look at our roadmap and we look at our partners. We have over 20 partners, autonomous partners globally, that we will have access to autonomous technologies in the large cities and markets that really count.
When you say access to 20 different partners, do you think that that is the way that the industry will continue to evolve, or do you expect consolidation on the robotaxi side as well, or the autonomous driving software side?
What we're seeing is this is a $1 trillion plus market in terms of autonomous mobility. I think delivery eventually will be of a similar size. And when you have markets that are that large, you usually don't have winner-take-alls. It's the same way with these LLM models. There are many to choose from, whether it's an OpenAI or Gemini. And I think the same will be true of autonomous. It's an exciting technology, but there are many players getting to the finish line. We just have to make sure that the players that we work with are safe and that, again, we're working with the regulators in a constructive manner.
Part of the strength of Uber, of course, is your data moat and just how much information you're collecting on users and the rides they're taking and their behavioural patterns. But other competitors in the market, like Waymo or like Tesla, are still continuing to build up that infrastructure as well. So how secure do you see that data moat being?
Well, there's nothing secure about the technology space. There's always innovation. And so we just have to move fast. And I'd say, actually, the more important factor in Uber is our global coverage. We operate in 70 countries. The demand that we're bringing every day, we've got millions of consumers opening our app all over the world. And we can point that demand not just to our current driver partners and delivery partners, but as autonomous comes in, to autonomous partners. You know, these are very expensive cars. It's a very expensive technology. And you want to amortize the upfront spend against as many transactions as possible, and Uber certainly is the leader around the world in terms of the demand that we can point to our autonomous partners.
Yeah, when you talk about a capital and just general capital raising plans, an interesting move that you made earlier this year was raising $1.2 billion by selling those exchangeable senior bonds linked to your stake in Aurora. A few details on that one. But do you see yourself doing that again in 2026? Something similar again, just to it was really seen as an innovative and creative way, I guess, to raise money.
Well, we have a very creative team. I think the good news for us is we're now free cash flowing close to $10 billion, and we expect that to increase substantially over the next couple of years. So through a combination of the substantial free cash flow that we have and also monetizing some of the equity stakes that we have in other companies, now it's over $10 billion, we think we have plenty of capital to be able to continue to invest in our autonomous technology partners or building out a fleet presence and or vehicles across the autonomous ecosystem so that we can continue to be a leader in the space.
You're well capitalized. That's what I'm taking away from that. But would you look to do something similar with your stakes in Didi and Grab in particular?
I think we'll be opportunistic, certainly. We love Grab, and it's a strategic partner of ours. Didi, of course, hasn't gone public yet. So to the extent we have an opportunity, we will look to, we call it recycling the investments that we've made. But at the same time, we don't need to do that because the company continues to throw off cash flow. We have a lot of options ahead of us.
I want to talk about also the sparser geographies strategy and the importance of that. Can you maybe spell it out a little bit for people exactly what you mean by that? Because it is interesting as you make sort of a push into lots of different centres. It actually seems to be less the urban centres that are doing well for you as a company?
Well, the urban centers continue to grow, but I do think that as I reflect on Uber's growth, we used to be a big city company. And what we're seeing is there's enormous demand for both mobility and delivery outside of the large cities, in the more sparse markets, the suburbs, et cetera. And our growth in the sparse markets is anywhere from 2 to 3 times faster for mobility and delivery than in the big urban markets, even though the urban markets are growing. At the same time, some governments actually need access to mobility. There isn't great taxi service in some of these rural destinations. In Japan, bus services is also not readily available. So, as Uber, obviously we run a business, but we want to be there for our stakeholders, and we want to help address some of the needs of the government. In Japan in particular, rural transportation is a real need, and we wanted to step up and give back to Japanese society because that market has been such a great market for us. And that's what communal rideshare in these rural destinations like Kaga City is all about. I experienced it myself. The countryside is absolutely beautiful. And our driver was so thankful. He actually runs a soba shop that's on Uber Eats as well. He delivers for Uber Eats. He's a part of our ecosystem, and it's amazing to see that happen, not just in the big cities, but also in a lot of small cities and rural destinations.
What do you make then for India in particular? Because, of course, your big competitor there is Rapido,
Yes.
and they've been very successful with a slightly different operating model, but including going down into lower tier or smaller tier cities. How do you also stay competitive there, and does that sparser geography strategy also fit for India?
Yeah, very much so. So with India, really, the fastest growing part of the Indian market is two-wheelers and three-wheelers, and the business model is different, actually. It's not a commission model, but it's actually a subscription model as well. Rapido is a real upstart there, but over the past months, we've been pushing back against them, and India continues to be a hugely promising market for us, so we're very happy about the recent results that we're seeing.
Dara, thank you very much for joining us this morning. That was Dara Khosrowshahi there, the CEO at Uber, in an exclusive interview. We'll have much more ahead on the Asia trade. This is Bloomberg.
Let's take a look at how Asia futures are faring. We are pointing to gains at the open on the Nikkei. Same story, it looks like, on the Kospi after those tech wobbles hit Asia stocks just a day ago, not quite benefiting from the enthusiasm, optimism about the Fed's potential rate cuts. And this is all coming against the backdrop, really interestingly, despite this extension of declines we're seeing on Broadcom, initially gaining after it beat when it came to the forecast. But I think the call in which Hock Tan spoke, I think that caused some concerns about whether the company is getting the AI payoff. And what does this tell us about the broader AI companies in space as well, Belle?
Yeah, and Avril, of course, it's also that competition vis-a-vis China. And a new report on that front says Huawei and its partner SMIC are making advances in chip production. Research firm Tech Insight says the Kirin 9030 processor is China's most advanced domestic semiconductor to date. It's used in Huawei's Mate 80 Pro Max smartphone. Both Huawei and SMIC have remained subject to US export controls that restrict access to key technology.
And as the AI race between the U.S. and China intensifies, ASML says it's working to balance its business with Beijing while maintaining ties with Washington. CEO Christophe Fouquet told us exclusively that the question for Western governments is how far behind they want China to be in chip-making technology.
It's back to the race, right? So China will not accept to be cut off from technology. Right, if you have 1.4 billion people, you want to advance. So this is just a reality. Then I think the West could make the choice to continue to keep China behind by saying, well, we're not going to provide them the latest and greatest product, but we could provide the third, the fourth, or the fifth generation. Today, the product we ship to China are 8 generations behind our INA tool we talked about it. So we're quite far behind. The tool we shipped to China, we were shipping to our customer in the Western world in 2013, 2014. So it's more than 10 years. And China, of course, is suffering from that. Their technology progress has slowed down. Now the question is, how far do you push that? Do we keep them behind 5, 10, 15 years? Not for me to decide. Or do we frustrate them to the point where they have no choice but to stop depending on Western technology, which for us, it means on the long term, that part of the trade is gone. They develop their own product, which they have done already for many things, and at some point of time, they could even come back to us and sell those products. So I think it's mostly time to find the right balance between, the frustration, the delay, and what could be the consequence of that. And I think that the right question is most probably, how far behind do we want China to be?
You can catch the interview in full on Bloomberg Tech Europe. That's later at 2:30 p.m. Hong Kong, 6:30 a.m. if you're watching in London. And the latest now from the corporate front. Well, PDD shares slid in New York. That's after Bloomberg reported that at least 2 fistfights broke out last week. That's between the company's employees and Chinese regulators. Sources say officials were investigating reports of fraudulent deliveries on PDD's platform, with police making several arrests. Pinduoduo says the account of the fistfights is false and bears no relation to reality. Apple has lost an appeals court ruling in its long-running App Store fight with Epic Games. The court upheld a finding that Apple violated California law with anti-competitive conduct. But the tech giant also won a new chance to argue for charging developers on transactions made outside of the App Store. The fight with Fortnite's creator has dragged on for more than 5 years. Lululemon CEO Calvin McDonald will step down at the end of January. That's as the company works to reignite growth. The CFO and Chief Commercial Officer will serve as interim co-CEOs while the search for a replacement continues. Meanwhile, Lululemon shares surged in extended trading. That's after the athleisure giant raised its full-year earnings guidance, or earnings per share guidance. We'll have more ahead on the Asia trade. This is Bloomberg.
The top global headlines we're following. Ukrainian President Volodymyr Zelensky has floated the prospect of allowing Ukrainians to vote on whether to hand the Donbas region to Russia. He says the Ukrainian people must have a say on the matter, whether in the form of an election or a referendum. Ukrainian territory is at the center of ongoing discussions among Washington, Kyiv, and Moscow as negotiators inch towards a potential agreement to end the war. Terraform Labs co-founder Do Kwon has been sentenced to 15 years in prison for fraud tied to $40 billion collapse of the Terra USD stablecoin in 2022. A New York judge handed down the verdict, saying the fraud was on an epic generational scale and caused significant monetary harm. The 34-year-old still faces fraud charges in his native South Korea. Thai Prime Minister Anutin Chanvirakul has moved to dissolve parliament, setting the stage for an early election. This comes amid reports that his minority government may be losing support. The hasty call for an election follows Thailand's raging border clash with Cambodia and mounting international pressure from the likes of President Trump to end the conflict. Now let's turn our attention to Chinese labels, from Pop Mart's Labubus to Shein, Temu, and Luckin. These labels are now global consumer favorites and cultural flag bearers. Bloomberg Originals has been looking at how geopolitics is shaping the rise of China's soft power.
Shoes, phones, windows to alternate realities. Many of our favorite products are made in China, but designed elsewhere. Well, that narrative's beginning to change a bit.
Pop Mart shares rise to a record as the CEO announces a new mini Labubu.
And the Game Award goes to Black Myth Wukong.
In the past, China was creating all these low-value products, and it's very hard to gain soft power from that. But as you move up the value chain, the natural byproduct is that your soft power also increases.
We will continue to actually see more of them penetrating into various overseas markets.
As the power of China in the global economy has increased, it's an opportunity for them to go and invest in these other markets, similar to the way that American companies probably did in post-war America.
Although no one's saying that's going to be smooth sailing.
A lot of the challenges for Chinese brands, especially in the US, depends a lot on the political uncertainties that have been unfolding under Donald Trump.
Some are locked out of whole markets, while others have invited a certain kind of rhetoric.
The Chinese government has that data.
So with Chinese brands seeming to win over global consumers, could they also help with something much less tangible?
What we're seeing now is an emergence of Chinese soft power into the rest of the world.
Well, subscribers can see that documentary in full right now on the terminal or at Bloomberg.com. It'll also be available later on Bloomberg Originals. That's the YouTube channel. But taking a look at markets this morning, because we're actually seeing some pretty broad upside. We are, of course, awaiting the start or the opens for Japan and South Korea. But so far, the ASX 200 is pushing higher. And you're taking a look at what futures are indicating. And again, it should be some moves to the upside at the open. So it's been an interesting session, given that we had really a lot of dip buys emerging in US markets overnight, and also really shrugging off any sort of fears around Oracle, those numbers we had, even though you actually see Broadcom, a fellow chip-related stock, slumping in late trade this morning. You can see around 5% decline so far. But we'll have the market opens, as you said, Seoul, Tokyo coming up in about 4 minutes from now. This is Bloomberg.
This is the Asia Trade. We're counting down to Asia's major market opens. And of course, we've been tracking the fallout from Broadcom despite having sales outlook that, beat the market expectations. During the call, we actually saw Broadcom slipping. So after hours, we are down about 5%. And this kind of tracks what we saw in Oracle just a day ago with its high capex. And also, despite some improvement when it comes to the outlook for AI overall, but it also is about the leadership when it comes to the jostle between TPUs and GPUs. Take a look at how Alphabet is managing to stay in the green in the after hours. But the focus, of course, in the past day has been about the Federal Reserve. We did get those jobless claims numbers rising last week by the most since the pandemic, for the numbers of last week at least. The dollar remains under pressure. Take a look as well at what we're seeing in Japan at the open. We are seeing those gains. Futures markets already pointed in this direction. So perhaps the fact that Wall Street managed to shrug off those tech jitters is providing a tailwind to Asia stocks. Tech, of course, was the drag across the region in the Asia-Pacific just a day ago. It is worth highlighting the region's benchmark is where it was at the start of this month, more or less. Tracking as well what the dollar decline has meant for the Japanese currency. It's still a bit on the struggle bus in terms of managing to climb significantly, keeping an eye on JGBs as well. We had been expecting these declines. We are watching as well for the Finance Ministry's meeting with primary dealers later today. Quick look at how South Korea is faring and that expectation of the continued gains or the rebound in South Korea stocks, looking a bit more tepid than what we're seeing in Japan at the early goings. Kosdaq is also coming under slight bit of pressure. Let's bring in David Chao, global market strategist at Invesco. David, this week it's been about the Fed. Your expectation is that whatever cuts come through could actually benefit the real economy stocks more. Talk to us about that thesis as we see that rotation in the U.S. as well. What is that going to mean for Asia?
That's right. I think that the stock market return still has legs, both in the US and in Asia, but I think that we're going to see a broadening out of the stock market returns. And it's really going to come down to style. And we know that the backdrop is quite favorable, that nominal growth is likely to pick up in the coming year. We're moving from a mid-cycle slowdown to a recovery aided by interest rate cuts from the Fed, but also other parts of Asia, central banks are also cutting. And that should be a conducive environment for small mid-cap stocks. And we've seen that before, where small mid-cap stocks tend to outperform during a recovery in the economy.
David, as you're speaking, we've also been seeing some developments related to SoftBank. This just crossing the terminal. It's eyeing a data center firm switch, and its chief, Masayoshi Son, is hunting for AI plays. David, even as we see this rotation perhaps towards value, what are you seeing in terms of opportunities and perhaps the need to be a bit pickier when it comes to Asia tech?
Well, I think that Asia tech, especially China tech, offers a much more interesting play. And I think that there's more upside given the valuation discount China tech or Asia tech has relative to US tech. While we are not seeing the significant earnings growth in Asia tech relative to the US, our earnings growth is improving in Asia, and I think that there continues to be good opportunities in this part of the world when it comes to technology and AI.
Do some of these opportunities include for JGBs, given where yields are? I mean, let's talk about fixed income now, because it's interesting, despite these hikes, the way yields are trending globally, but investors seem to be shifting towards the idea that JGBs are looking attractive.
Indeed, indeed. I would say that JGBs have not been attractive for such a long time. And who knew that one of the most attractive fixed income government bonds right now would be JGBs. And especially if you look on the long end of the curve, if it's the 10-year or even the 40-year JGB, they're at yields that are very attractive. And I think that they're going to see additional interest, not only from domestic investors, but certainly from foreign investors as well.
What about when it comes to DMs versus EMs in fixed income next year? You alluded to some of this. I mean, if we see these Fed rate cuts trickle through into yet a softer dollar, what might that mean for EM debt?
Well, I think that EM debt is a lot more attractive than developed market debt. And that's because developed market debt, the yields are not as attractive as emerging market debt. And also, while the dollar is depreciating, that is going to have certainly some FX and investment implications. A weaker dollar driven by Fed cuts should be a boost to emerging market equities and also emerging market local currency bonds. A weaker dollar has very important investment implications. And we think that this could be the year that emerging markets could outperform the US and developed markets.
The weaker dollar is also contributing to yuan strength. Certainly, there are arguments for and against why this is helpful or harmful for the Chinese economy. But what is your sense of next year, the extent in which it can continue gaining without perhaps cutting into exports? What are your forecasts for the Chinese renminbi?
Well, I think it's very much dependent on the pathway for the dollar. And I think that our call is for the dollar to continue to weaken, not only because it remains expensive on a trade-weighted basis against a basket of currencies, but the Fed is likely to continue to cut. We have a couple more cuts for the Fed compared to the rest of the world. The rest of the world is pretty much done with their central bank rate cutting cycle, while the Fed has been behind the other central banks. And so I think this interest rate differential, coupled with the dollar still being expensive, is likely to weaken the dollar against a basket of currencies.
David, what are we missing about the risks for 2026?
I think one of the risks for 2026 could be that inflation comes back. I think that there are expectations are very well anchored right now for inflation, both for bond investors and also for domestic households, expectations for inflation. But we're seeing significant fiscal stimulus from governments, from Japan, from Europe, and from the US with the One Big Beautiful Bill. And I think that this not only could drive economic activity, and growth is likely to pick up on a year-over-year basis next year, but it could also fuel inflation. And I don't think investors are expecting that.
David, 2026 is going to be perhaps just as interesting as this year. David Chao, global market strategist at Invesco. Now let's take a look at how U.S. assets are faring. We saw, of course, the climb in treasuries, particularly on the short end, given how the Fed just a day ago came in a little less hawkish than most in the markets had anticipated. We are seeing the 10-year nudging towards that 414 level. Some concerns still on the back end. Now, for U.S. crude futures, WTI, we are seeing it rebound from the declines of just a day ago, which is, of course, interesting, given how the escalation in tensions between the U.S. and Venezuela have played out. Commodities markets, traders seem to have pretty much shrugged that off. Copper prices also going on up. They're hitting those fresh all-time highs. And this is also following on from the Fed delivering that rate cut. We also have the supply side of things certainly propelling the red metal. More ahead on the Asia trade. This is Bloomberg. We're watching tech shares in Asia as investors digest Broadcom's earnings. The chip company vying with Nvidia for AI computing revenue suffered a stock slide after its sales outlook for the red-hot market failed to meet investors' lofty expectations. Let's cross to San Francisco, and our senior executive editor for Global Tech, Tom Giles, joins us. So, Tom, what's going on? Why are investors reacting in such a manner? Is this just the curse of being one of these high-flying AI tech stocks?
These companies have just had such a massive run-up in their share prices over the last year as you started to see them clinch bigger and bigger AI-related deals. In Oracle's case, in Broadcom's case, they have really started to mount a credible threat to NVIDIA's lead in these most advanced AI chips. The problem is when you are priced for perfection like these companies have been, you really have to deliver results, and you have to show we are continuing to put up the numbers that you have come to expect from us. And Broadcom just had a call with investors that left them disappointed. It raised a lot of questions.
I guess also because of its hesitance to provide the 2026 outlook for AI. What is your sense of what kind of demand they can realistically expect from these hyperscalers going forward?
Sure. So Broadcom talked about this $73 billion backlog in orders, but they were vague on exactly how long and how long that would last to fulfill those orders, first of all. Second of all, as you mentioned, they didn't issue a forecast for the coming year for AI revenue specifically. And they also talked about margin pressure. It costs a lot to get into this market. The market is really glad, investors are really glad to see Broadcom starting to step up and be an alternative to NVIDIA. The problem is they want the payoff. They want clarity from Hock Tan, the CEO. They want a sense of how long it's going to how many orders you have in your backlog and how long that's going to last. And they just didn't get straight answers from them on the call today.
Tom, we've also been seeing this week the plunge in Oracle share prices. And I think the concern about how they're borrowing to sort of feed the beast, I guess, high CapEx spend. What are you seeing there?
Yeah, Oracle had a big, also another big run up in its shares over the course of 2025 until a couple of months ago. They too were getting cloud computing orders. This is a company that had for many, many years been known for a database, right? But they, over the last several years, have been moving in the direction of cloud computing along the lines of what you see at AWS, at Azure for Microsoft, Google Cloud. They're becoming a more viable competitor. That's great news to the market. The problem is to fund your expansion into cloud computing costs money. Building those data centers, investing in those data centers, Oracle's had to borrow, it's had to boost CapEx. And again, similar to Broadcom, investors want to know what the payoff is going to be. They want to know that this is money well invested and that you're not getting ahead of yourself. You're not investing in a build that's not going to translate into real sales. On the positive side of things, I mean, they've been signing up some great customers, customers like OpenAI, TikTok, owned by ByteDance right there in China, Meta. These are great customers. These are the customers you want for your cloud computing business. They just want to, investors just want to know that they're going to get a payoff from those customers, and again, that Oracle is not going to get too far out over its skis.
A bit of a higher bar for these tech firms going into 2026. Tom, great to chat. Thank you so much. Our Senior Executive Editor for Global Tech, Tom Giles. Some other tech stories we're following today. Disney shares closed higher in the U.S. after the company announced it's licensing some of its iconic characters to OpenAI for use on the startup's video platform. Disney has also agreed to take a $1 billion stake in the startup. While the deal covers some of the firm's more famous characters, it does not include talent likenesses or voices. OpenAI is rolling out a new AI model designed to make ChatGPT better at coding, science, and a wide range of work tasks. This comes after Google put the startup on the defensive with the well-received launch of Gemini 3. The company says the new GPT chat, or GPT 5.2 model, I should say, is faster at finding information, writing and translating, and is intended to be better at mimicking human reasoning. And a new report says Huawei and its partner SMIC are making advances in chip production. Research firm Tech Insight says the Kirin 9030 processor is China's most advanced domestic semiconductor to date. It's used in Huawei's Mate 80 Pro Max smartphone. Both Huawei and SMIC remain subject to U.S. export controls that restrict access to key technology. And of course, tech will be in focus when European markets open as investors digest Broadcom's results. One company we're watching closely is ASML. CEO Christophe Fouquet spoke to us exclusively about how they're working to balance business with Beijing while maintaining ties with Washington.
It's back to the race, right? So China will not accept to be cut off from technology, right? If you have 1.4 billion people, you want to advance. So this is just a reality. Then I think the West could make the choice to continue to keep China behind by saying, well, we're not going to provide them the latest and greatest product, but we could provide the third, the fourth, or the fifth generation. Today, the product we ship to China are 8 generations behind our INA tool we talked about it. So we're quite far behind. The tool we ship to China, we were shipping to our customer in the Western world in 2013, 2014. So it's more than 10 years. And China, of course, is suffering from that. Their technology progress has slowed down. Now the question is, how far do you push that? Do we keep them behind 5, 10, 15 years? Not for me to decide. Or do we frustrate them to the point where they have no choice but to stop depending on Western technology, which for us, it means on the long term, that part of the trade is gone. They develop their own product, which they have done already for many things. And at some point of time, they could even come back to us and sell those products. So I think it's mostly time to find the right balance between, the frustration, the delay, and what could be the consequence of that. And I think that the right question is most probably, how far behind do we want China to be?
Catch the full interview on Bloomberg Tech Europe later at 2:30 p.m. Hong Kong, 6:30 a.m. if you're watching in London. Now, a closely watched policy meeting in China has ended with officials signaling they'll maintain economic support next year, but refrain from ramping up stimulus. Let's bring in our China correspondent, Min Lo. Min, what were your key takeaways from this readout of the CEWC?
Hey, Avril, I think the CEWC really didn't give us any big surprises. If you look at the list of priorities, remain as expected. Top of the list is domestic consumption, and second is to boost the new quality productive forces, and third is to embark on those reforms. And when it comes to boosting domestic consumption, for example, the readout focused on, raising the income of residents, stimulating private investment, optimizing the consumption subsidy program, which suggests that program could be extended next year. The readout also mentioned that central government budget could be increased, which suggests maybe they might issue more long-term ultra-long special treasury bonds to create some sort of program to boost consumption, especially the services sector, which was particularly highlighted in the readout. And of course, when it comes to boosting livelihoods, there's been talk about improving the social safety net for certain disadvantaged groups, ensuring stable employment, especially for migrant workers and fresh graduates, and also talking about addressing involution as well and paying back all those delayed payments to companies to ensure that that it wouldn't hold corporates back from their spending as well.
Min, I guess at the heart of why consumers are hesitant to spend, it's about property and the slowdown in the country overall. Are we hearing a bit more about how authorities are looking to stabilize the market?
Yes, that's one of the priorities as well, but I should say it is bottom of the list. There are 8 key priorities that were highlighted. Resolving these risks related to property is number 8. And yes, the government talked about stabilizing the housing stock, especially encouraging the acquisition of the existing housing stock to be converted to affordable housing. But the thing is, this property crisis, as you said, has been persisting for 4 years. The government has tried many different measures, and yet we haven't seen a sustainable recovery. So what makes this one different is the big question, and analysts are not too optimistic, especially given that the take-up rate of this conversion of existing housing stock into affordable housing has not been great. Local governments are reluctant to acquire those housing stock because of the low returns on investment, and some analysts, including one from UBS, is expecting housing prices to continue declining for at least 2 years.
So the downturn in property could grind on for a while longer yet. Min, thank you so much. Bloomberg's China correspondent Min Lo. Meantime, Bloomberg Intelligence says large fund managers are likely to further cut their $6.3 billion of China property dollar bond holdings. And this comes as Vanke's onshore bond extension raises concerns about government support. Let's bring in Bloomberg China credit reporter Trista Sinyi-Luo. Trista, so how have investors been reacting to what's happened with Vanke lately?
Yes, so as we can see from the BI's report, they're estimated there will be further cut on this dollar bonds. I think one of the reasons is because under a lot of ongoing restructuring plan, there are actually some mandatory convertible bond options. So if you choose that option, the bonds you hold will convert to equity. So that's one of the reasons why we are seeing, a lot of bonds holding those large fund holds will decrease. But another more important reason is definitely what happened to Vanke recently. Definitely, dampened, investors' confidence on this sector overall. And I think what happened to Vanke recently is raised investors' concern about how government gonna keep, offering support on this sector. Or will there be any more support coming, or Vanke is on to deal with that issue?
What about this extension proposal voting deadline today? Tell us more about that.
Yeah, so Vanke's investors are presented with three proposals. One is Vanke is asking bondholders to agree for them to extend the yuan bond payment for 12 months without any upfront cash payment or installment. And the other two offer more generous terms, can ask Vanke to pay interest on time or also offer some credit enhancement. And investor will have until by the end of Friday, which is today, Hong Kong time, to vote. And any proposed change need to have at least 90% approval from creditors. So our teams closely watch the voting results, and the fail to pass the plan could increase the default risk.
Trista, thanks as always for helping us track this. Bloomberg China credit reporter Trista Sinyi-Luo. We have more ahead on the Asia trade. This is Bloomberg. The day after the Fed, take a look at how S&P 500 futures are faring, with that focus still on whether AI high-flying tech stocks have been delivering. Broadcom, the drag in the after hours, despite initial gains, those have certainly reversed. We're seeing that also showing up on, of course, the Nasdaq 100 futures. And despite the softness that we've been seeing in the dollar of late, that looks to be a bit stable towards the end of the week. This is Bloomberg. Let's take a look at commodities. Natural gas has returned to trading lower for the year after its biggest drop in 9 months. On top of warm weather forecasts, the EIA says stockpiles in the U.S. also fell. Steven Stepczynski leads our Asia energy coverage. So, Steve, what happened? The gains in natural gas didn't last very long.
It didn't, and I think a lot of it had to go down to the forecast. It looks like, the market, natural gas, it's not something that traders who aren't willing for a little bit of pain to go through. This is a market that is not an easy one to follow because it is so weather driven. And so we had some cold forecasts a few weeks back, and that helped to push prices up. That literally disappeared. When you look at the maps for the next few weeks, it's all red. It's warmer than normal weather. So that cold weather has dissipated, and because of that, we've seen the prices fall. But I think this is all on the back of booming U.S. LNG exports, right? If there's cold weather, that exacerbates record exports, and it tightens the market more. But if you're not seeing that cold weather, then you're going to see the prices drastically decline. And that's why we saw it jump up to above $5. Now we're back down below $4 per MMBTU. And through all of that, it's something that, again, if you're a gas trader, if you're a veteran, you've been through this many times. If you're not, this is clearly a shock to your system.
Yeah, so how are traders positioning, given how things are so dependent on the weather? What is the extent in which, there's a bit more of hedging going on?
Right. I mean, look, there are a few things. Once you look past winter, there are a few things that you have to look at. One is how much more U.S. LNG exports are we going to see next year, right? We have one facility called Golden Pass starting up. We're having other facilities ramping up production. So there will be more U.S. LNG exports. And then on top of that, you also have inventories rapidly declining. And so depending on where we end winter, inventory levels and where LNG exports are, we could see higher prices, maybe not quite as high as we saw last week, but you could see a higher price environment for a lot of next year. Now, that does change depending on weather, of course, as well as production. Are gas drillers going to bring back rigs if they see gas prices above $5 per MMBTU, which is more than double where we were about a year ago, or will they not? So a lot of that is dependent as well on production.
Also dependent on production are these oil prices. It's also interesting how we've been seeing it, that supply glut is really what's dogging the markets. And you've made that, comparison where we're seeing silver prices as well. It's comparable in what Brent and silver looks like, $16 Where do we go from here?
Yeah, I mean, I think it is kind of interesting. Of course, this is apples to oranges. These commodities don't trade in the same fundamentals, but an ounce of silver is now worth more than a barrel of oil, which I think is pretty interesting, and it shows the dislocation of where both of those commodities are going. Now, for oil, we are facing an oversupplied market, right? We have OPEC Plus, while they are taking a pause from their production increases, they have been increasing for much of the year. Chinese demand really hasn't been living up to what I think a lot of folks were expecting. And then on top of that, you also have very resilient and strong U.S. production. So will the U.S. shale drillers cut back? Now, on silver, it's the opposite, right? Of course, that's driven by, Fed rate cuts. That's driven by a weak dollar, people kind of going to those assets. But also, the opposite of oil, silver actually has utility. Unlike gold, you can use it in some high-tech products. So there's actually a shrinking supply, and there's been a rush over the last few weeks and months to kind of secure that. You've seen people taking silver out of stockpiles at LME, and so because of that, you're seeing that price increase. So, which is why I thought it was funny that just a tiny little ounce of silver is worth more than a pretty sizable barrel of Brent oil.
Yeah, those price comparisons are quite interesting. But as you say, apples to oranges. Stephen, always great to chat with you. Stephen Stepchinsky, who leads our Asia energy coverage. And I'll take a look at oil prices once again. We are seeing that the climb just a short while ago, not really lasting for the moment. We're holding out at 58 on WTI. Of course, it's also got to do with the supply-demand dynamics from monthly reports following from the OPEC and IEA sort of forecasts. Let's bring in Vandana Hari, founder at Vanda Insights. Vandana, great to see you as always. We want to talk about the geopolitical backdrop a little bit, but it's been characterized, this energy market, as a super glut. Would you agree with this assessment? And does what we're hearing from the IEA and OPEC change things?
Good morning. So yes, indeed, the glut and the super glut narrative has become quite entrenched and just refuses to leave the headlines. But I think the jury is still out. If you indeed were in a glut situation, which is what was predicted and projected even for the current quarter, and let's face it, we are at the end of the quarter and Brent has still been sitting pretty above $60. If indeed we were in that glut situation, just to remind ourselves, the IEA predicted 4 million barrels per day of excess for the current quarter. You would have seen Brent spiraling down into the 50s. Now, of course, there is the argument on the other side, which is that, well, that's where perhaps the equilibrium price is, but we are not seeing that happen because of this Russia risk premium, which is also not leaving the market as the Ukraine talks drag on. Bottom line, though, no, super glut. I don't know, first of all, what super glut means. The most we have seen is the IEA, which revised yesterday its excess forecast to about 3.8 million barrels per day in 2026, which is still unprecedented. I think we're probably going to see closer to 1.5 million barrels per day of surplus next year. So supply is increasing, demand growth remains sluggish, but we are not in the 4 million barrel per day environment, I don't think.
What are you seeing among the OPEC producers? And perhaps increasingly, is it getting hard to corral them in terms of production targets?
So I think it's worth bearing in mind that the maximum OPEC plus cuts, which were in place over 23-24, actually have been unwound. So between April and December this year, OPEC plus, the 8 members within that group, have put back nearly 2.9 million barrels per day of crude back into the market. So, if all of that supply being already back online, if we were to see the excess, we would have seen it by now. We would have seen it reflect in prices and so on. There's about 1.2 million barrels per day left for OPEC plus, the G8 members to unwind. And as you mentioned, yes, they are in a pause for Q1. I think they are in a wait and watch mode, especially with all of this talk about a glut going into 26. Unless we see a sharp spiral down in prices in first quarter, not my base case, but unless we see that, I expect them to continue unwinding the cuts. I think they're trying to wipe the slate clean. There was just too many layers of cuts with different amounts, different participants, and so on over the past 2.5 years. I think they want to make a fresh start from 27. So they will continue to unwind, I believe. But there's just about 1.2 million barrels per day that they have almost 9 months of the latter half 9 months of next year to bring back.
And then on top of that, you also have the geopolitical overlay. And while Venezuela, in terms of the impact on the exports, that might not be as significant, the bigger concern is this escalation between the U.S. and the country. So what is your sense on what is an appropriate geopolitical risk premium?
Yeah, so on the geopolitical front, I'm watching Venezuela and, of course, Ukraine, not to forget. Ukraine seems to have given way to Venezuela, obviously, because of the sharp escalation in the last few days in terms of what's grabbing headlines in the oil market. But both of those are very much in play. The other comparison or similarity is that the market is still waiting to see what is the end game in both cases. So Venezuela, of course, we've seen the escalation spiral very much into the oil market with the seizure of a VLCC that was carrying Venezuelan oil earlier this week. So the big question now is, what is Trump's end game in Venezuela? Is it regime change? Is it simply he's trying to extract pledges from President Maduro to try and halt all those, the illegal drug trafficking and so on? All said and done, though, very little risk premium as a result of that, because Venezuela pumps about 900,000 barrels a day, give or take. So it's not that big a factor on the market. I would say Ukraine is a much bigger one, with Russia supplying more than 6.5 million barrels per day. But that, again, right now, with things in a limbo, is a big question mark for the market.
Also, among the question marks, the global growth outlook for next year. I mean, we've heard in the past day, right, from the likes of the Fed, they seem to think for the U.S. it's going to be an improved economic outlook for 2026. Talk to us about the interplay between the U.S., China, and how that's going to affect demand in 2026.
Yeah, so just if you look at, let's say, the IMF's latest economic outlook, I believe that was in November, it did revise up the forecast for U.S. economic growth next year. And in fact, put it at a better, or about 2.1% in 26 compared with about 2% this year, which is an exception, really, because most other major developed economies, the IMF sees sort of a sustained downward slide, definitely OECD Europe. China, the IMF is quite pessimistic on. I think it expects economic growth to slide to about 4.2% from the high fours this year. So all in, yes, the U.S. economic growth, again, it's relative, isn't it? I mean, it was very, very pessimistic just after Trump's Liberation Day tariffs, and then we see a lot of backpedaling and so on. So the picture improves. But I would still say that it's quite murky as far as the U.S. is concerned. And you mentioned Fed a minute ago. Definitely what the Fed does, it's in a very, very sticky situation, balancing inflation expectations with what's happening in or about to happen in the jobs market, and with regard to consumer resilience as well. So, but even if the U.S. does reasonably better next year, its oil demand is pretty much in a plateau stage, which is the same for OECD Europe. China is the big change when it comes to global oil demand growth. So that is also now stagnating after we saw high single-digit growth in China for most of the early part of this decade. So all in, that means global oil demand growth is going to be rather sluggish, not just in 26, I would imagine, going forward for the foreseeable future.
And we watch China. Vandana, always great to get your insights. Thank you so much. Vandana Hari is founder at Vanda Insights. And here are some other top global headlines we're following. Ukrainian President Volodymyr Zelensky has floated the prospect of allowing Ukrainians to vote on whether to hand the Donbas region to Russia. He says the Ukrainian people must have a say on the matter, whether in the form of an election or a referendum. Ukrainian territory is at the center of ongoing discussions among Washington, Kyiv, and Moscow as negotiators inch toward a potential agreement to end the war. Thai Prime Minister Anutin Chanvirakul has moved to dissolve parliament, setting the stage for an early election. This comes amid reports that his minority government may be losing support. The hasty call for an election follows Thailand's raging border clash with Cambodia and mounting international pressure from the likes of President Trump to end the conflict. We have more ahead on the Asia trade. This is Bloomberg.
I believe that the Fed should be passive most of the time and only come to the rescue if the market is, if the economy is seriously overheated and tending towards hyperinflation, or seriously underactive and not creating jobs.
Oaktree Capital Management co-chairman Howard Marks. Now take a look at how the market's expectations, despite what Howard Marks is saying, is still for the Fed's cutting. And you are seeing that pressure still coming through on the dollar. That's feeding into some optimism for EM assets. Let's bring in Bloomberg Rates and Emerging Markets macro strategist Marcus Wong. So Marcus, talk to us about these forecasts, right? You have some of these investment houses thinking that 2026, because of what you're seeing in the dollar, it's going to be a pretty good year, maybe even better year for EM.
To be fair, I think it is quite a high bar for EM to outperform this year. This year, our returns have been very stellar, especially for EM local currency bonds. So let's hone in on Asia first, for example. Generally, investors are quite bullish for EM Asia bonds for next year. A few reasons are cited. One will, of course, be more rate cuts from central banks, although it may not be as much as this year. Generally, we could still see rate cuts from Indonesia and Thailand, for example. And even the news coming overnight of another election, this could possibly even slow down government spending even more, which could see possibly the economy leaning more on further monetary policy easing. Another thing that investors are latching on, of course, would be FX returns, for example. So, of course, you could say that the dollar resistant trade has kind of taken a pause in the second half. But looking into 2026, with how the announcement of possible new Fed chair, possibly has it, who knows? But even if you could see, a return of dollar weakness in 2026, and I think it's a fair view among quite a number of people out there, this will, of course, help FX returns and also open more room for, policymakers in this region to essentially cut rates. Another thing cited would be, lighter foreign bond positioning. Positioning in Asian bonds is lighter compared to, Asian peers, for example, or global peers, for example. So this obviously provides more room for investors to actually come in next year, and this will be a boost for Asian bonds. That said, I'll just caution that I think in general, investors are generally more bullish for a higher carry, higher beta bonds in LATAM and EMEA, essentially because, a lot of investors see 2026 as essentially a more pro-risk environment with the Fed probably cutting and with a slide in dollar. This would essentially help, boost, global EM bonds such as in Latin America and EMEA more than those in Asia.
What exactly are you seeing in Southeast Asia? I mean, we just saw a day ago BSP, yes, they cut, but then the signal is that might be the last one in this easing cycle. How is that likely to impact the Philippine peso?
Yes, I think, the cut from the BSP was, largely expected, largely priced in. But it was an easing signal that the end of the easing signal from the BSP that caught some people by surprise. We saw the actual peso edging higher, after that those headlines came in. So yes, I think definitely with the BSP potentially signaling that it could be the end will provide some support for the Philippine peso. But I would dare say, that the larger story, the larger thing that's been dragging, the Philippine peso, of course, is the sharp slowdown in growth, and of course that has been tied to the flood-related corruption scandal. So what could really provide a support for the peso next year is how the growth returns and how government spending returns next year. So if you look back in 2013, when there was also a somewhat similar corruption scandal, essentially government spending took at least 6 months to, in a sense, normalize. But a full 12 months to actually, go back to really, standard situations. So what I'm saying here is that, at least for the next few months or so, growth could possibly still be a drag for the peso. And, even the BSP governors cited yesterday that the second half growth will only pick up in the second half. So in a sense, I think in the near term, we could see still weakness in the peso, but, whether it tests record low may depend on where the dollar heads moving forward.
Marcus, good to chat. Thank you very much. Our rates, emerging markets, macro strategist Marcus Wong. Now, still ahead, Philippine Central Bank Governor Eli Remolona joins the China Show to discuss the economic outlook for the Philippines and whether the rate-cutting cycle is at an end. More ahead on the Asia trade. This is Bloomberg. Uber CEO Dara Khosrowshahi says they expect to offer robotaxi services in more than 10 markets by the end of next year. Khosrowshahi spoke to us in Hong Kong in the past hour.
The APAC market and in particular the North Asia markets as well, they are huge growth markets for us. And if you look, for example, in the rideshare business, over 30% of our global first trips coming into the category come from the APAC region. The area is growing very quickly, including taxi as well, which is actually one of our newest products on the platform. So for me, coming here, seeing the teams, meeting with local business people and regulators, and talking about how we can be part of the future growth of the region is really what my agenda is.
Early this year, you also put out a statement on the robotaxi push as well.
Yes.
And so the Middle East and Asia were the markets for 2025
Yes.
to launch. And we've seen, of course, that initial deployment in the Middle East already. What's happening on the Asia side?
Well, lots of discussions on the Asia side. I think what's really important is to set up a regulatory framework to go forward. For example, Hong Kong has various trials and pilots going on, and in many other markets, we're talking to regulators about how we can be a part of shaping rideshare and autonomous rideshare going forward. The technology is absolutely getting there. These are the robot driver. It doesn't get tired, doesn't get distracted, and we very much look forward to working with various authorities to introduce rideshare into the markets. We're now live in 4 markets now, as we speak, in the U.S. And in the Middle East. And I expect to be in 10-plus markets by next year. And we want those markets to be in the Asia-Pacific region as well.
Where then in Asia do you think is the most likely place?
We'll see. I think that certainly Japan has great potential. They
are behind on their regulation.
They are behind in their regulation, but I think that they also understand that with an aging population, there's a real need for transportation, not just in the large cities, but in the rural areas. And for example, I experienced that personally going to Kaga City, and where we have communal rideshare, and kind of took a rideshare trip and understood what the needs are there. So we're talking with various countries, regulatory authorities. I think Japan is going to be part of it. I certainly hope that Hong Kong is going to be a part of it. Australia, where we were just talking about, is a huge market for us. So we're having those dialogues, and I think that the picture will shape up over the next 2 years because the technology is definitely getting there.
Uber CEO Dara Khosrowshahi. Now take a look at how SoftBank shares are faring. Even though value stocks are doing well in Japan, SoftBank is also among the outperformers. Overall, we are seeing that positive sentiment towards firms tied to the likes of OpenAI after it unveiled its new model. That is, of course, GPT 5.2. And we also have that tie-up between OpenAI and Disney providing a bit more support of sentiment. All this being received well by investors at a time where Hang Seng TAIEX futures are pointing to gains at the open. So it looks like might be a bit of improvement for tech at the end of the week. That's it from the Asia Trade. Our markets coverage continues. This is Bloomberg.